Hi folks, this is Lee with the Market Sense, the week of January 19th, 2020. The charts in this presentation come from the Trade Navigator software that's provided to us by Gettess. And this is a weekly bond market chart, and I'm a little disappointed in the way they've reacted. Not surprised, just disappointed. After this big down bar here, which I thought might be an exhaustion bar, we were looking for them at least to get back up to this lower moving average. They went back up, but they didn't get up that far. So the best way you can look at this then is it's simply a consolidation of this move down. And a consolidation does not give us probable direction. It just means the market's biding its time until it decides what to do next. So we're kind of looking for either strength above here or weakness below here to clue us into the next direction. And as you can see by what they've done so far, they don't really have to do anything. So consolidation is a tough thing to trade. It means they're binding down in a tight little range, and they usually spring out of there at some point, sometimes quicker than others. But there's just no directional bias. There's no real clue as to what to do here. So, I mean, we could be looking at the 170.16 area here as possibly being resistance if they get there. But getting there would mean taking out last week's high, so that wouldn't, it wouldn't be a strong sell there. It's just not much you can do except wait for the market to move and then attempt to go with it if you want to do something this week. But by and large, the market is indecisive right now and isn't really showing us a probable direction. Now in stocks, we had a little different situation. Last week, we were looking for them to hold this upper moving average here because of the strength they'd shown the week before. And they did for most of the week. Then they had a sell-off Friday, including very late Friday, even the last hour Friday, that took them below that. It confused me a little bit because I was just trying to analyze the market, and it occurred to me after the close. We had reports that there might be attacks in both the nation's capital and state capitals starting on the 16th and continuing through the 20th. So people were just scared. They didn't want to hold long positions over the weekend in case the world fell apart. And that makes perfectly good sense. So since nothing really bad has happened since then, they opened this week where we have Monday on Tuesday and started right back up again. Now, that doesn't mean they're just going to blow out the top, although they certainly could. But it does mean that this sell-off here probably isn't something we should be analyzing very hard. The fact that they broke that support there, that moving average, may not really be meaningful. So I'm maintaining sort of a bullish bias, but I'm waiting for them to prove themselves, and I don't really have anything for them to that I can take a position against, unfortunately. The 3,800 level is where the resistance appears to be this week, but they could very well break that. That's actually the big clue as to how strong they'd be. If they can break that resistance, then there's almost no limit to how high they could go, and I would be trying to look for ways to get on board if they do break up higher. But they could go down to 36.90 here, and that wouldn't be shocking either. The price pattern would look just fine. So I think if we get through Wednesday without anything nasty happening in terms of skirmishes, then, maybe we're okay and maybe we're going higher. Very tough week, though. A short week, very tough week to find anything to do, I'm afraid. Same issue here in the QQQ. This is representing the NASDAQ, and they look very similar. They did also break down late last week, a little harder actually than the S&P did, and they've gapped up and have just gone up this week, although not exactly a rip-roaring rally, is it? But the fact that this all seems like nonsense, once we get through the weekend, that wasn't necessary anymore. Now they're back higher again. I think you have to maintain a bullish bias. I just don't have any good thing to buy against. This 313.60 area that they kind of seem to be using as support really shouldn't have been support since they closed below it. It's not something we could be looking for. The next area up here is around 317.20, I think, and then you've got the old high here. Let's call it 1940, 319.40. If they can get above 319.40, well, they're new all-time high territory, and you know there's no reason to step in front of that. So again, I apologize. There's just not much of anything exciting to do this week, I guess, except watch the inauguration or what surrounds it. And hopefully the markets will give us a clue as to what will happen next week, because this week just kind of doesn't seem to be worth our time. That's what we've got for you today. Hope you can find something profitable to do yourself. Thanks for checking in to see what we're thinking about.